Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, shares of Jet Airways hit an air pocket today, ending the day lower by 7%. The company tanking in trade after reports that it is facing a financial crisis. Report also suggests that in an interaction with employees, the airline's top management cited an unexpected increase in the cost of fuel, erosion in market share and operational issues. For its current condition, it's also asked pilots and engineers to take a salary cut of 15%. Remember, Jet's wage bill at over 2,800 crore rupees in fiscal year 2018 was among the highest in the country compared to other airlines. Jet also pays more for fuel. This due to the wide-body aircraft it flies. The airline's fuel costs increased by 27% year-on-year to about 7,000 crores in FY18. Now, sources tell us that the airline is undertaking several cost correction measures, and its promoter group may also be looking at the possibility of diluting stake. Kritika Saxena and Utkarsh Chaturvedi join us now with the details. Kritika, coming to you first, what is the possibility or the likelihood of a stake sale by the promoters at this point?
Shireen, the plan has been in work since the fourth quarter of FY18. We understand from our sources that the promoters have started conversations with a couple of players to possibly look at selling up to 20%. Now, it's up to 20, so it could be lesser than that as well. We learned that they're looking at a combination of a fresh issue and a secondary issue, but the fresh issue will be larger so that they are able to bring liquidity into the company. Now, who could the possible buyers be? Too early to talk about it, but remember a year ago, we had seen Air France, KLM and Delta Express interested in Jet Airways. The talks were in very initial stages, didn't go through because the promoters wanted a premium at that point in time. But now we understand that all three players are still on board and the conversations and negotiations with them are likely to begin. We also, in fact, understand that a couple of private equity players are also likely to be approached. They have identified a few firms. The talks will begin now. So it will take some time to see these talks actually go through and see what comes out of those stake sale conversations. But the other point is that we learned that they are also identifying non-core assets across the board. Now, we don't know which assets have been identified, but what I understand is that they could look at subsidiaries, they could look at their real estate portfolio, they will look at a whole host of areas, and investment bankers and consultants have been identified to firm up the plan for both these points, the stake sale as well as the possibility of non-core asset sale, to be able to bring down debt and to be able to bring some increased cash flow into the company. On its part, though, Jet Airways has said that there are no plans for stake sale.
All right, Kritika, let's stay with that story. We also understand that Jet Airways has chalked out a detailed cost reduction plan. Utkarsh joins us now with the details. Utkarsh, what internal measures is the airline looking to undertake at this point?
Shireen, in fact, we spoke to sources in the top management, and they said that the host of measures, apart from asking the employees to cut their salaries and some possible layoffs, the company is really looking at a lot of measures. The first one is the sale and lease back of planes. Now, remember that Jet at this point of time has 16 planes which is owned by the company, and most of them are wide-bodied aircrafts. Now, what Jet is looking is to sell them so they can get some working capital and they can stay afloat for some time. The second one will be renegotiating vendor contracts. Now, what we are picking up from our sources is that these vendors are across the sectors. So whether it be the maintenance contracts, whether it be the airport contracts, engineering contracts, all of them are being re-looked at, and the try is that the prices should come down. The third one is cut loss-making routes. Now, this is something which has been an ongoing process for Jet Airways, but this will be done aggressively now. In fact, as we speak, what we pick up from our sources is that 3 ATR vehicles at this point of time are grounded by Jet Airways because they were running on loss-making routes. The fourth one is early release of planes. So all the planes which have a lease left of 1 to 2 years, what the company is thinking is that they will go ahead and return the planes and they will wait for the 737 Maxes to come in. Remember, the 737 Maxes gives a fuel economy which is 15 to 20% better. So these are the cost reduction plans. Will they be enough? Will be something which we'll have to look at. In fact, just before miking up, I got a message from a pilot of Jet Airways saying that the salaries have not yet been credited, and Jet Airways has asked time for 3 to 4 days to give them the salaries for last month.
Okay, so salaries not credited for the month is what we're given to understand. Jet Airways has responded to various reports. In a statement to the exchanges, the airline has said, and I quote, "In line with the company's stated focus of creating healthier and more resilient business, it has been implementing several measures to help it reduce costs as well as realize higher revenues." End of quote. Apart from that, the airline has also said that at this point in time, it is not looking at selling stakes. So what exactly has gone wrong with Jet Airways? Why is the management compelled now to ask employees to undertake pay cuts? And what is the way forward? Kapil Kaul of CAPA, Centre for Aviation, joins us. Also with us, Dheeraj Mathur, Executive Director at PwC. Gentlemen, appreciate you joining us here on the show. Kapil, let me start by asking you, let's just take a look at the financials now. For the fourth quarter, revenue up 8.7% at 5,924 crores, which was lower than estimates. EBITDA loss at 765 crores versus a profit of 118 crores. On an FY18 consolidated basis, a loss of 634 crores versus a profit of 1,441 crores. Jet Airways auditors once again reiterating the qualification, saying that the company's ability to generate cash flows to meet its obligations. They were concerned about that. They were also concerned about the ability to raise funds to meet its financial support. This is not the first time that we've seen an auditor qualification there for Jet Airways. What are you most concerned about, Kapil?
Shreen, I think if you look at from the 2016 June onwards, there are four things that happened quite quickly. One, the fuel went down significantly, almost at one point of time, it was 55% down. The currency at one point of time in the last year was almost touching 60, so that was a benefit. The non-fuel cost, which was significantly, I would say, in control, and in this case, the non-fuel cost had gone down. And if you look at the yields for most of the last 3 years, except starting from January, the yields were marginally high, stable, and in certain cases had an upward trajectory. Now, come January 2018, the fuel has escalated. The exchange is now going to be around 70 to 72. Yields have declined, so the pivots which help the industry recover are moving in the reverse direction, both on the fuel, exchange, yields, as well as non-fuel costs. Now, in this case, Jet's non-fuel costs are relatively stable. They have enhanced productivity measures, whether it is asset utilization of the fleet, trying to moderate their non-fuel costs. But the industry, the positive results were predicted, was largely now reverse direction. The other challenge, which is Jet continues to have legacy issues. It started from the acquisition of Sahara. And after that, they combined the acquisition of Sahara with the international, a massive international wide-bodied operation. And at the same time, the fuel went up to 150 and there was a financial crisis. I don't think it has structurally recovered after that. I think the blunder started from the acquisition of Sahara, and post that, same time, they had an aggressive international wide-bodied plan. They almost put 20 wide-bodied in a short span of time. Once it was confronted with the financial crisis and the financial crisis in the fuel, I don't think, and the competition, because the competition has structurally challenged them in the domestic. So I think it's a combination of factors, and it's mostly legacy issues that they have been overcome in spite of some significant productivity gains. And I don't think, and one of the key elements that is challenging them is they need to recapitalize, and they need to recapitalize significantly. I don't agree that the recapitalization can be delayed. I think it is critical for them to recapitalize, and significant amount of recapitalization. For that, whatever channels and measures are available.
Do you have a ballpark? Do you have a ballpark, Kapil, of what kind of money we're talking about by way of the recapitalization, and what route they're likely to take?
So, one, they need to basically refinance their $400 million debt. I think that can happen in March. So we need a guarantor for that $400 million refinancing. That is the first step they would need to do. And the second step of recapitalization depends upon if you take a 3 to 5 year sort of 3 to 5 year view. Then you're closer to looking at about $300 to $500 million of recapitalization to sustain and recover and build profitability. So one is you need a guarantee for $400 million, and then you would need, my assessment, $300 to $500 million of recapitalization.
An additional
over a period of the guarantee security for the guarantee is different than recapitalization. The cash into the company could be $300 to $500 million. I would be tempted to say it'll be closer to $500 million, which includes restructuring the airline and investing in product development, modernizing their fleet, the entire enterprise-wide investment that would be required. Yes.
Okay. Let me bring in Dheeraj Mathur, ED at PwC, into the conversation. Dheeraj, as we were just talking, what we've seen as far as the fourth quarter is concerned, whether it is fuel expenses going up or forex loss. In Jet's case, there was a time maintenance charge of 253 crores. That has impacted industry on a whole. We've seen the results for Indigo as well. But, the legacy issues that Kapil was talking about, clearly not a lot of that has been addressed, even though we saw Etihad come on board. Perhaps that has added another degree of complication to this already sort of somewhat complicated mix. What are the tough structural decisions that Jet will need to take if it has to stay afloat?
Well, I think the biggest one is going to be, the biggest challenge I see is going to be on cutting the employee costs. That's something that's going to be a major issue for them. From what one hears, reads in the press, it's apparently they're not those discussions aren't really proceeding very smoothly with threats of being grounded and so on. Talk of that, but essentially there is only so much that the airlines can do, because a lot of the apart from, as Kapil rightly pointed out, the legacy issues of particularly of the acquisition of Sahara, which is, I think, where the trouble really began. But beyond that, I mean, there is only so much that the airlines can do. But most of its woes are stemming from the external environment, as Kapil pointed out, the exchange rate weakening, the fuel going up from under 30 to around 80 right now. So I think the challenge will be on the cost cutting, essentially the cost cutting that they will have to go in for, not just in terms of the employees, but also renegotiate contracts and so on.
Yes, renegotiating contracts, trying to cut down on routes that may no longer be profitable. Those are decisions that Jet will have to take. But Kapil, coming back to you now, this business of sale of non-core assets to try and bring down debt, as well as the options that Jet can leverage from a working capital perspective to tide over the liquidity crunch that it's facing today. What could be those levers?
I don't think what non-core assets I'm not aware of any non-core assets. Most of the aircraft they owned are on a sale and leaseback, the narrow body. They may have some ability to do wide body sale and leaseback. That could generate some cash. Overall, if you see, their contingent liabilities is more than their market cap. So there is clearly a structural sort of an issue there. I think measures they will need to incorporate to be able to get additional working capital. Because the first issue would be the refinancing. I think every creditor would be looking at how the refinancing gets guaranteed. And once that gets guaranteed, in possibility looking at the aircraft they owned are on a sale and leaseback, the narrow body. They may have some ability to do wide body sale and leaseback. That could generate some cash. Overall, if you see, their contingent liabilities is more than their market cap. So there is clearly a structural sort of an issue there. I think measures they will need to incorporate to be able to get additional working capital. Because the first issue would be the refinancing. I think every creditor would be looking at how the refinancing gets guaranteed. And once that gets guaranteed, in possibility looking at increasing working capital measures would need to be initiated. But I think the key part would be is to funding into the company. I frankly think that it is now overdue. It should happen maybe year back. Better at whatever cost thing they need to now get it pretty quickly. Working capital and other short-term measures. The structural issue is to significant recapitalization of the company.
So you do believe, Kapil, that whether it's KLM, Air France, Delta, I mean, these are the conversations that happened apparently in the past, which fell through over valuation issues. You think whether it's the promoter that needs to dilute stake, fresh equity issuance or secondary share sale, that is the required ask at this point?
The first raising investment would be much easier provided they demonstrate the business as quality going forward. And I think that is possible. Trying to do a lot more, which possibly is not appreciated in terms of the kind of productivity they have, especially a non-fuel cost. But as I said, the legacy issue is a structural issue that has been for 10 years. The only way that can solve is recapitalization, significant recapitalization. Now, if you look at the share price and the market cap they have, maybe the promoters will have to take a significant haircut in terms of their promoter holdings to move this forward. And also ensure to the prospective investors that the business has quality and it can be restructured. My assessment is that if the business has quality and they can demonstrate it, I think you could possibly find suitors to invest. But promoter holding, a major cut in promoter holding is critical, and I think that will be inevitable going forward.
Okay, major cut in promoter holding will be inevitable. Dheeraj Mathur, do you believe that given where the business finds itself today, it will find suitable takers and that the promoter may need to, in fact, consider taking a significant haircut?
Yeah, I mean, I see the overall environment for civil aviation is very positive in India. In terms of, say, for one, the government is pumping in a huge amount of money, creating infrastructure. Udan has taken off. It's doing well, in fact, as per latest reports. So the passenger traffic has been growing. Of course, there was a dip in May, but otherwise there's been a consistent rise. So the overall environment, as far as the aviation sector is concerned in India, is certainly positive. But there are these issues of the fuel pricing. And there are the issues of the currency, both of which are out of Jet's control. Now, in terms of Jet being a value proposition, certainly because it is it's number 2 by market share, and it has extensive international operations. It does have Etihad, a very, very strong player in itself. So I don't believe that that Jet is not an attractive proposition at all. Now, as far as raising money at this point of time, you need money in the company. So the promoters reducing its stake per se may not, I mean, unless you will need to issue fresh capital so that it comes into the money rather than the promoters. So therefore, I don't believe it's an issue of the promoters taking a haircut. It's just a question of issuing fresh equity so that money comes into the company. I mean, the promoters selling their stakes and then...
And that is what...
Let's get a reaction from the landscape. It was a good day for the bulls as indices recovered all losses that they incurred yesterday. So the Nifty rallied about 1% today, regaining that 11,300 mark. Sensex ended with gains of about 400 points. The mid-caps regained 19,000 mark, aided by a 200-point gain. Now, banks outperformed today, rallying about 350 points. So far now, it's green across the screen, and that's a good way to end Friday. But here's the latest on the monsoons. The Met Department has predicted normal rainfall during August and September. It has also interestingly said that the distribution of rainfall has been very good across the country, except in Bihar, Jharkhand and northeastern states. Now, the department expects favourable distribution to continue during the rest of monsoon. Now, dismissing the rumours that the rainfall was below the normal range. Well, here's another CNBC TV 18 exclusive. The search for Shikha Sharma's successor at the Axis Bank corner office may soon be over. We learned that Egon Zehnder, the global leadership search firm that was entrusted to help the board find the next chief executive officer, has shortlisted 3 candidates. Who are these candidates? Ritu Singh is here with the details. Ritu, you have been on this story for a long time now. Who are the final 3 candidates and who's the possible frontrunner? Give us a quick idea about his profile as well.
You know, speculation has been rife about who will succeed Shikha Sharma ever since Axis Bank announced her exit. And we've been able to confirm 3 names, in fact, that have been shortlisted by Egon Zehnder and approved by the board and are now awaiting RBI approval for the final stamp. So first, you know, the front runner, of course, in the list that has been given is Amitabh Chaudhry, who's currently the MD and CEO of HDFC Life. Now, Amitabh Chaudhry has been with this company for the last 8 years, before which he was with the Infosys BP BPO, but he does have banking experience from his previous stints at Bank of India and some other banks as well. The second on this list is B. Sriram, a very familiar name. He is the former managing director at State Bank of India and is now heading IDBI Bank, is largely, been brought into the bank for the turnaround of that bank. His term ends, by September. So perhaps if he is appointed, he would be in a position to join the bank very quickly. The third candidate is a senior executive from Kotak Mahindra Bank, whose name we have not been able to confirm, but we're given to understand that, it is a very senior executive from the bank, but he is, of course, third on the list of preference that has been shared with the Reserve Bank of India. Interesting to notice that there are no internal candidates that have been picked, and this is because, according to our sources, RBI was not happy with the current management, and therefore, to avoid any sort of dissent from RBI, no internal candidate has been picked to succeed Shikha Sharma. We did write to both Mr. B. Sriram and Mr. Amitabh Chaudhary, but they haven't responded to CNBC TV 18's query.
Okay, fair enough. We will know the exact answer soon, ending all the speculation. Thanks, Ritu, for taking us through those details. And here's another important story from the court space. Weeks after the Supreme Court observed that the government's notification to set up a social media hub or hubs across India would tantamount to moving towards a surveillance state, the centre has now taken a step back. Attorney General K.K. Venugopal told the court today that the government has withdrawn its proposal to create a social media hub, and hence the PIL challenging it should be quashed. Ashmit Kumar is here with the details. Ashmit, what led the government to scrap its plan?
That's a big development coming in from the Apex Court. The government today informing the Apex Court that as far as they're concerned, they're doing a U-turn, they're going back, they're withdrawing the RFP with respect to the social media communication hub. Now, for the benefit of our viewers, this strategy of social media communication hub was envisioned by the Ministry of Information and Broadcast for developing social media hubs for every district for monitoring the social media chatter. Now, that was the intent of the SMCH, or the Social Media Communications Hub. However, it was challenged by way of a PIL before the Apex Court. The PIL said that if it goes to the extent of monitoring individual Twitter accounts, Facebook accounts, it would monitor messages, it would be a surveillance state, that the government would be playing the role of a big brother, and that this was unacceptable. This was in violation of various fundamental rights, not to mention right to privacy as well. And in fact, the Apex Court at the last hearing had also observed that if we move in this direction, it would be tantamount to India moving in the direction of having a surveillance state. Now, on the back of that, the Apex Court then had sought a clarification by the Attorney General. Now, the Attorney General himself, appearing for the government, appeared before the Apex Court, where he has clarified that as far as the RFP is concerned, that RFP has been withdrawn. And as far as the broader policy is concerned of having social media hubs, the government is doing a rethink. The government is looking to revise its position and to revise its thinking. So clearly, a major U-turn coming in going forward as far as not just social media hubs, but also the sanctity of the right to privacy is concerned. Back to you.
Well, there's going to be a lot of debate on that, Ashmit, to actually see that going through. But for now, let's end this edition of After the Bell. Many thanks for joining in. Stay tuned, though. Taking Stock will take all the market action of the week and what you need to prepare for next week forward on the other side. Don't go anywhere.